Welcome to this YouTube channel. In this video we are going to talk about the cryptocurrency, its present and future. Before starting this video, like this video, and subscribe to our channel for future updates. A cryptocurrency is a digital or virtual currency that is protected by encryption, making counterfeiting and double spending practically impossible. Many cryptocurrencies are built on blockchain technology, which is a distributed ledger enforced by a distributed network of computers. Cryptocurrencies are distinguished by the fact that they are not issued by any central authority, making them potentially impervious to government intervention or manipulation. Cryptocurrencies can either be mined or bought on cryptocurrency exchanges. Cryptocurrency purchases are not permitted on all e-commerce sites. In fact, even famous cryptocurrencies like Bitcoin are rarely used for retail purchases. Cryptocurrencies, on the other hand, have become popular as trading instruments because of their increasing value. They are also utilized for cross-border transfers to a limited extent. Cryptocurrencies are digital or virtual currencies that rely on cryptography technologies to function. They make it possible to make safe online payments without the involvement of third-party payment processors. Various encryption methods and cryptographic approaches, such as elliptical curve encryption, public-private key pairs, and hashing functions, are referred to as crypto. Cryptocurrency types. The most well-known and valued cryptocurrency is Bitcoin. It was conceived and introduced to the public in 2008 by an unidentified individual named Satoshi Nakamoto through a white paper. Thousands of cryptocurrencies are currently available on the market. Every cryptocurrency claims to have a unique purpose and specification. Ethereum's Ether, for example, is marketed as gas for the underlying smart contract platform. Banks utilize Ripple's XRP to ease transfers between different locations. The most commonly traded and covered cryptocurrency is Bitcoin, which was first made available to the public in 2009. There were around 18.8 million Bitcoins in circulation as of November 2021, with a total market cap of around $1.2 trillion. There will only be 21 million Bitcoins ever created. Following Bitcoin's breakthrough, a slew of new cryptocurrencies known as altcoins have emerged. Some are Bitcoin clones or forks, while others are brand new currencies created from the ground up. Solana, Litecoin, Ethereum, Cardano, and EOS are among them. By November 2021, the entire value of all cryptocurrencies in existence had surpassed $2.1 trillion, with Bitcoin accounting for roughly 41% of that total. Cryptocurrencies were created with the goal of revolutionizing the financial system. However, like with any revolution, there are trade-offs to be made. There are significant gaps between the theoretical ideal of a decentralized system with cryptocurrencies and its practical application at the current level of development for cryptocurrencies. Cryptocurrencies promise to make it easier to move funds between two parties without the use of a trusted third party such as a bank or credit card provider. Public and private keys, as well as various incentive schemes such as proof of work and proof of stake, are used to secure such decentralized transfers. Investing in cryptocurrencies can be profitable. Over the last decade, the value of cryptocurrency markets has surged, reaching nearly $2 trillion at one time. Bitcoin was worth more over $862 billion on crypto marketplaces on December 20, 2021. Criminals are increasingly using cryptocurrency for undesirable operations such as money laundering and unlawful purchasing. The case of Dread Pirate Roberts, who managed a dark web bazaar for drug sales, is well known. Cryptocurrencies have also grown popular among hackers who use them to spread ransomware. Cryptocurrency in the present. Many novel payment methods have emerged as a result of the introduction of computers and the internet, including debit and credit cards, net banking, mobile wallets, UPI, and so on. In October 2008, Satoshi Nakamoto published the groundbreaking white paper Bitcoin, a peer-to-peer electronic cash system, which launched the cryptocurrency revolution. Bitcoin, the first truly peer-to-peer electronic currency, was born as a result of this. Today, about 6,000 coins are being traded. Medium of exchange coins, stable coins, utility coins, privacy coins, meme coins, NFTs, and other cryptocurrencies are among them. Cryptos with specialized use cases are impacting industries such as e-commerce, education, data storage, gaming, marketing, media, supply chain, video streaming, and many others. Crypto's future. The Bitcoin market has changed dramatically in the previous few months. It has grown at a quicker rate than ever before, yet its future has never been more uncertain. With so much free time and so few things to do with it, many people have turned to crypto trading for the first time during the pandemic. The viral trail of Reddit posts, where talk of stunks and diamond hands spurred hundreds to collectively inflate the price of certain commodities to the moon, attracted everyday customers, many of whom had no idea what the blockchain was. This spawned a whole new category of meme stocks, reviving dormant companies like GameStop and AMC, while also rocking the market to its foundations. Analysts predict that by 2030, the global cryptocurrency market would have more than tripled. All of this points to one major tendency: cryptocurrency, which was originally only understood by a small group of anti-establishment investors, is swiftly becoming a household word. According to analysts, the global cryptocurrency industry would more than triple in value by 2030, reaching roughly $5 billion. Investors, businesses, and brands can't ignore the growing wave of crypto for long, whether they want it or not. Cryptography, on the other hand, seems to be plagued by paradoxes. Investors support regulation, but they are concerned about many of the consequences it will have. They're environmentally conscious, but cryptocurrency has a significant carbon footprint. For a long time, the number of cryptocurrency investors has been steadily expanding around the world, but it has recently exploded. Furthermore, the investor profile has changed. It's no longer such a fringe passion in the age of meme stocks and stimulus checks. Rather, ordinary people have viewed this new asset class as an opportunity to supplement their portfolios with potentially more profitable, if riskier, assets. In comparison to 2018, elder customers have started to invest in cryptocurrency at a considerably higher rate. Consumers over 35 years old account for nearly half, 47%, of those who plan to invest in Bitcoin in the next 6 months in the United States. Crypto offers a new way to manage finances for many of these existing and potential investors, and many also find that the financial independence of crypto has liberated them from the restrictions of traditional banking. The benefits of cryptocurrencies have just begun to draw institutions, and traditional finance is scrambling to meet the rising demand, such as U.S. Bank's recent launch of a Bitcoin custody service, which allows hedge funds to invest in the digital currency. While increased institutional investment means more potential for average investors, it also challenges the ability of digital currencies to operate outside of traditional finance. The paradox begins here. The infusion of institutional capital into cryptocurrencies over the last few years has begun to shift the market's power structure. 13 years ago, cryptocurrency users were attracted by a desire to shake up the elitist, institutionalized world of finance, to provide a universally accessible way to move money and pay for products and services, independent of personal circumstances. To deal in crypto, unlike traditional banks, you didn't even need an address. All you needed was an internet connection. In theory, cryptocurrency relies on the collective activities of everyday users to self-regulate. They secure and update the transaction log, the blockchain, and the process allows anyone with a computer to mine coins. Fast forward to 2021, and cryptocurrency's future looks very different. Bitcoin miners are no longer the only ones benefiting from its success, nor are they the only ones mining it. Over time, the mining network has been encircled by a few businesses that can offer the massive quantities of processing power and electricity required to mine at scale, making it extremely difficult for individual users to participate. At the same time, the discovery that big corporate expenditures, such as one by Tesla, which caused the price of Bitcoin to soar 20% in a single day, put even more doubt on the market's democratic nature. Crypto trading and mining, in addition to enterprises entering the market, has piqued the interest of government regulators like never before. In comparison to established investment categories, governments have done very little to regulate or manage the Bitcoin market since its inception. For the most part, cryptocurrency has been permitted to spread as a decentralized financial asset around the world. While authorities will determine the future of cryptocurrencies, businesses, many of which are coming into the market to serve the requirements of the rising marketplace that governments have so far neglected, can also have an impact. This could be accomplished by facilitating trades in a more comfortable, secure atmosphere for newbies, or by providing knowledge and resources to inquiring intenders. App for peer-to-peer payments Venmo is accomplishing both of these things, giving easy-to-understand content to assist educate intenders along the path, and allowing users to dip their toes into crypto using a platform they're already familiar with. Established financial institutions and fintech disruptors alike can serve as a bridge to the crypto future, leaning into the shifting profile of investors and predicting what the more mainstream audience could need is a part of that future. Traditional payment providers that provide access and education will undoubtedly appeal to older investors, while the expanding number of businesses that accept digital currencies can make the market feel safer and more stable. Whatever the future of cryptocurrencies contains, there's a lot of work to be done to balance the risks and the rewards, and there's a lot of opportunity for those who take on the challenge. What do you think about this video? Do let us know down in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.